Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it is the tariff jitters which has played the spoil sport yesterday, and today also it seems like the markets wouldn't ignore it because at first that gift Nifty is also indicating a lower start for the Indian markets, and even the pre-open rates are pointing out to a negative start for us. Yesterday, Nifty did record its 10th day of losing streak, and today it could be 11th. It was the record losing streak for the Nifty since its official launch since 1996. So yes, quite a bad streak that is coming in for the markets. But we will watch out whether or not Nifty can smartly defend that 22,000 levels like it did yesterday, and any breach can bring the support down to 21,800. Yes, the global handover, like we mentioned, that it is weak. Concerns of trade warfare is bogging down the market sentiment and bringing on that risk of mode inequities across the asset classes. US markets yesterday ended lower. Asian markets was also largely mixed and lower this morning. After Canada and Mexico tariffs, Canada has retaliated with about 25% tariffs on US goods worth $107 billion. And even Mexico has said that they will be announcing their tariff plans by this weekend. So we'll watch out how this moves. And of course, China has also imposed an additional 15% tariffs on some US goods. So we'll watch out how this tariff narrative unfolds and how will this impact our own markets, whether or not we can remain insulated in the longer run or not. We'll talk about that. And we'll also take up some stocks in focus, and don't forget to drop in your stock related queries. We will be taking them up and addressing them shortly too. Now let's quickly take a look at the top headlines this hour. Wall Street sells off for the second straight day as President Donald Trump sparks a risk trade war. The Dow and S&P 500 slip over 1% each, while Nasdaq recovers with some round with cuts of about 2%. The US futures, however, trades higher as Commerce Secretary indicates that there could be some compromise on tariffs. All right, the Asian markets are largely lower on global trade tensions. China has set a target of around 5% GDP growth for 2025 and has laid out stimulus measures to boost the economy. Meanwhile, the gift Nifty is pointing out to a weak start for our own markets. Gold prices have risen as dollar weakens and trade warfare concerns continue to grow. Crude prices have hit a 6-month below the $75 per barrel on potential output hikes by the OPEC and US tariffs, along with Canada, Mexico and China. So yes, these were some of the top headlines that we have watched out. But yes, as I was mentioning, that Nifty has registered its 10th day of losing streak yesterday, and it has logged the longest losing streak in the last 29 years. It has tumbled now nearly 16% from its all-time highs, so it has marked the 6th largest drawdown since the 2008 crisis, and of course the 2nd largest since 2020 COVID crisis too. Of course, yesterday's sell-off was fueled by the FI outflows and of course the tariff threats that the Trump has imposed. Even in the Congress meeting that Trump has addressed today, he's mentioned that he will be, he would not hesitate to impose tariffs on the countries that have retaliated with their tariffs. So yes, those are the threats that is coming in from the Trump's Congress meeting. If you look at yesterday's session, we saw that the recovery was seen quite visible from the broader end of the markets because the Nifty midcaps saw a second straight day of gains and the small caps outperformed the overall market. So some recovery and reversal that we saw from the broader end of the markets. Today, an interesting note that did come out from Macquarie on India's valuations, where they have said that the relative valuation for growth and returns have, however, shifted to above par from aggregators at this point of time, and MSCI's India's valuation is now more attractive than US, but it still remains compared elevated to the EM markets. But however, Macquarie has mentioned that the Nifty mid-100 segments aggregate valuation remains elevated despite the re-rating we have seen, and of course the financials remain attractive in a sector relative valuation. So yes, that is an interesting note that is coming out from Macquarie. But let's take a look at what today's trade setup would look like. First up on your screen is your option cues data. Well, the Nifty put call ratio has risen to about 0.86 levels from 0.81 levels in the previous session. So yes, some optimism in the markets that could come out, but we'll watch out whether this sell-off is going to bottom out in today's session also or not. But next up on your screen is the F&O ban list. One new stock has been added, which is your Manappuram Finance. Stocks retained and removed, none of them at this point of time. And if you look at the fund flows data, well, FIs continue to be the net sellers for the 9th consecutive session. Now, just a couple of minutes before we go to the open, but yes, the pre-open rates have pointing out to the, a very subdued start for the Indian markets. Sensex is, however, flat in the green and Nifty is flat in the red. So, a mixed trend coming in for both the indices at the pre-open. But on that note, let's quickly get on board with our technical expert of the show. We have with us Nilesh Jain of Centrum Broking. Nilesh, good morning. So good to have you back. 10th day of losing streak, as I was mentioning, for Nifty, but it still managed to hold above that 22,000 levels. What are you eyeing next on the charts?
Decline for the 10th consecutive sessions now. Yesterday, in fact, there was a bit of respite where the Nifty managed to end about 22,000. That's the only positive that we saw yesterday. But overall structure is hinting that going forward, sooner or later, we'll break 20,000 decisively and move towards 21,800 to 21,700. So that's the next level that we are expecting to be tested. But if you look at the weekly time frame chart, 100 weeks moving average, that is coming around 21,800. That is going to be the major support from here. If at all it breaks below 21,800, then the next target would be somewhere around 21,200. But looking at the overall setup for the Nifty on the daily time frame chart, where the RSI has gone into extremely oversold territory, there are possibilities of a dead cat bounce and a pullback. This pullback may take Nifty towards 22,300 to 22,400. It looks unlikely to be as sustainable on the upside. But yes, more sort of a consolidation is something we are expecting today. Bank Nifty on the other end, which is showing relative strength compared to the Nifty index, it has formed a triple bottom kind of formation at 47,800. So 47,800 is something in the Bank Nifty that needs to be closely watch out for. If at all it breaks below 47,800, then it will be considered as a structural breakdown. But as of now, with a stop loss below 47,800, a contra bet in the Bank Nifty can be taken. So overall, stock specific action is something that we are focusing, and it is better to stay cautious on the index front, since both the indices are trading at their crucial juncture.
Okay, crucial juncture they're trading at, Nilesh. But Nilesh, yesterday we saw good participation from the PSU banks, and SBI was of course, the top contributor for the Bank Nifty index too. But what are you watching out for SBI as a counter? We saw a good upgrade from CLSA that came in yesterday.
Absolutely. So for the second back-to-back session, the State Bank of India has witnessed a strong signs of rebound. But as mentioned, there are possibilities of supply coming in at the high levels, even in quality stocks. So this particular counter should be looked at from a positional perspective, not from a trading point of view, because from a trading perspective, a bounce which was very much expected has already been seen yesterday. A further follow-up move can be seen, but 725 is the important resistance, since that's the 21-day moving average for this particular counter. So till the time it doesn't crosses above the same, where we are expecting some consolidation to continue. But it's a good bet. It should be added in the portfolio. These are the quality stocks, and positionally we are very much bullish for 800 plus kind of a target. But purely from a trading point of view, I think after yesterday's spurt, it is better to avoid for the time being, till the time we see any confirmation.
Okay, all right. So 800 is what you're eyeing out for. Nilesh, just quickly on the take of your broader indices, because that saw a good relief yesterday. Do you expect this reversal to sustain going ahead?
See, very unlikely to be a sustainable, but yes, as mentioned, the indices, majority of the indices are trading in the oversold territory. So a dead cat bounce, or I would say a pullback, that cannot be ruled out. So in the broader markets where we have seen a lot of underperformance, so yes, we are expecting a pullback to continue, but at the high levels, very unlikely to be a sustainable.
Okay, very unsustainable, highly unlikely at this point of time for broader end of the markets. Yesterday, we did see that the small caps had outperformed the headline indices, but we'll watch out if today also the sustainability continues. But first trades coming on your screen, we have opened above that 2200 mark at this point of time. Flat in the red, but however, 0.1% gain coming in for the Nifty 50 index. A good open, but we will watch out if this gains is sustainable throughout the session also or not. Sensex also also opened flat in the green, but above that 73,000 mark at this point of time. Bank Nifty index definitely supporting the overall broad-based recovery that we are seeing at this point of time, which is your 0.1% gain coming in from the Bank Nifty index too. If we look at the auto index, after yesterday's fall, Nifty auto index has seen a good comeback, 0.5% gain coming in there too. Nifty metal index also giving out and eking out in 0.5% gain at this point of time. Nifty IT index, much to a relief, giving out a percent gain at this point of time. If you look at the other indices, Nifty Pharma index rightly unchanged at this point of time. We'll watch out for this index going ahead. If you look at the broader end of the market, small cap indices again, once again today 0.5% gain coming in for the small cap index. If you look at the mid cap end of the markets, well, mid caps is also showing a bit of a resilience and 0.5% gain coming in at this point of time for the broader end of the markets. Let's take a look at some of the top gainers on the Nifty. Well, Hindalco nearly 1% gain. Hindalco topping the Nifty 50 gainers list. That is followed by ICICI Bank, NTPC, Tech Mahindra and SBI. XBI extending its gain today to the, extending its gain after yesterday. Tata Motors also seeing a bit of a gain, 0.5% gain coming in for Tata Motors too. On the other hand, if you look at the top losers on the Nifty 50, well, Bajaj Twins is dominating the list with a cut of about up to 2% at this point of time. L&T, SBI Life, Cipla, Shriram Finance seeing a cut of about nearly 0.5% or so. But yes, as we were talking about Nilesh, we were talking about some of the sectors that you need to watch out. Anything that you are watching out for keenly going ahead?
Absolutely, Lovisha. So as mentioned, stock-specific action is something that we are eyeing on, and good attraction can be seen in the crude oil-sensitive stocks and sectors like OMC stocks. So within OMC space, BPCL is something that is looking attractive. The risk and reward is also looking favorable. So BPCL can be bought for follow-up move to continue towards 260 to 265. With a stop loss below 247, BPCL is a long. Apart from that, Indigo is another stock where we have seen a good breakout yesterday from a symmetrical triangle formation. Today, we are witnessing a follow-up move in Indigo. So Indigo can also be bought, and one thing, keep a stop loss below 4530, and upside may extend towards 4700 to 4780. Apart from that, if you look at overall broader markets as mentioned, so some follow-up move is something that we are expecting, and it looks like that is likely to continue. So within that space, if you just look at CESE's particular counter, yesterday we have seen a good breakout coming in this particular stock. So CESE can be bought at current level for a follow-up move to continue towards 142 to 145. Stop loss can be placed somewhere around 134.
Okay. Let's take one stock in focus, which is your Ambuja Cement. Well, the stock is reacting positively after CCI gave its green light for the company to acquire Orient Cement. And once this acquisition is completed, Ambuja Cement will hold about 73% stake in Orient Cement. Nilesh, how does the stock look like on the charts? Because past 6 months, Ambuja Cement has seen significant correction. What does the near-term hold?
Correction was largely seen across all the cement pack, but if you look at Ambuja Cement, specifically this particular counter, it has formed a good double bottom kind of pattern on the daily time frame chart. So there are high possibility of a follow-up move and a rebound to continue towards 485 to 495 from a short-term point of view. So yes, can be bought, can be added purely from a trading point of view with a stop loss below 462, and upside may extend towards 485 to 495.
Okay, 495. Let's take another stock in focus, that is your RVNL, which is buzzing in trade today after the company received the letter of acceptance for a project worth about 730 crore rupees. Nilesh, how does the stock look like on the charts? Railway counters have been taking a seat back, but how do you see the stock going ahead?
Merely a pullback can be seen, but not looking conviction as of now. So as of now, if you look at all the railway stocks where we have seen a lot of corrections, so after such a sharp correction, there could be possibility of a dead cat bounce. But better to avoid till the time we get any confirmation. But merely a pullback can be seen as far as RVNL is concerned. It has a strong support around 330, 329, I would say. 329 should be the stop loss for the long position. But I won't recommend taking any contra bet at current level.
All right. Let's take another stock in focus, which is your GE Vernova TD. Well, the company has won about 3 orders, which is worth about 500 crore rupees from Power Grid. Nilesh, Q3 for the company did see a good profit jump. We can see like threefold profit jump. A good set of numbers, but the stock has seen significant correction this year. Do you expect a good turnaround going ahead?
Looks difficult as of now because the stock is in a gradual declining move it has witnessed. So the stock is currently witnessing more sort of a consolidation. So this consolidation is likely to continue. Better to avoid for the time being. Some pullback in between that cannot be ruled out. It is currently trading somewhere around 313. So stop loss should be placed around 307, and pullback may extend towards 320 or 325. But not advisable to take any contraband at current level.
Okay, all right. Let's take some stock, queries that is popping up on our live feed. Well, the first query coming in from Naveen is on the view on Vijay Diagnostics. Nilesh, how does the stock look like on the charts? We've seen 13% downtick in the past 1 month.
Right. In fact, in last two sessions, if you see, there was a bit of a spurt with a good volume attraction as well that we have seen. So could be possible that we may see a follow-up move towards 1050 or 1100. But as of now, the chart is not convincing at all to take any aggressive long bets. If somebody is already holding the long position, can keep a trailing stop loss below 940. And I would advise to stay put for a follow-up move to continue towards 1050 to 1100. But again, looking at the structure, it is advisable to keep booking profit at the high levels as well.
Okay, all right. Naveen also has a query on Bharat Electronics. Nilesh, how does the stock look like on the charts? We saw second streak of gains coming in.
Absolutely. So, if you look at defense as a whole, we have seen a good momentum. In fact, Bharat Electric, this particular stock is also looking attractive. It has formed a good base formation in the zone of 240 to 245. After 2 days of spurt, there could be possibility of some profit taking. But if somebody is already bought, then I would advise to keep a trading stop loss somewhere around 255 and stay put for a follow-up move to continue towards 272 to 278.
All right, okay. Let's move on to the next viewer query. That is your Satya is asking the view on the major support levels to buy IRCTC for the long term. Do you see this as a favorable buy for the long term horizon, Nilesh, IRCTC?
Right, so it has witnessed a good decent correction from the highs after making highs near about 1125. The stock is available almost at 50% corrected price. It has a major multi-month support somewhere around 550 to 570. So still there is some more room left on the lower side. But if somebody is looking to add in the portfolio from a position perspective, I would advise to buy in a staggered manner. And as far as stop loss is concerned, that comes somewhere around 550. And yes, definitely it can be added in a portfolio purely from a positional point of view. It has a potential to move towards 850, 900 or maybe 1000 kind of levels from 1 to 2 years perspective.
Okay, all right. Let's move on to another viewer query. That is your Kishore is asking the view on PNC Infratech. PNC Infratech, how does the stock look like on the charts, Nilesh? Because after October, the stock has completely fizzled out gains and it's trading around like 250 to 300 range.
Well, not looking attractive at all to initiate any long position in this particular counter. But if somebody is already holding the long position, then one can keep a trailing stop loss somewhere around 233 because 233 is a very strong support. So that should be the stop loss for the long position. There could be possibility of a pullback. Pullback may come towards 265 to 275, but it's not advisable to take any sort of long bet at current level because there are no signs of reversal yet.
Okay, no signs of reversal yet on the stock visible for PNC Infratech. But let's take one more stock in focus, which is your Power Grid, because the stock is reacting well. And we also have a viewer query on Power Grid by Kanan Manthan. Well, the company was declared a successful bidder for 3 projects to establish an interstate transmission system on a BOOT basis. But Nilesh, the stock has slid about 11% past 1 month. So where do you expect the stock to go next? Is it a good, accumulation point at this point of time for the long-term horizon?
Absolutely. So a good bet to add in the portfolio once again. So power space, energy space, this particular counter, he has given a good decent correction. So if you look at from a positional perspective, these are good levels to enter in this particular stock. And in the last 2 sessions, in fact, this particular counter has outperformed. So we can expect a follow-up move to continue towards 270, 275 from a short-term point of view. But positionally, the stock has a very strong support somewhere around 235. So first of all, that should be the stop loss for the long position, can be added in a staggered manner. And yes, it's a good portfolio stock from a positional perspective.
Okay, all right. Let's take another viewer query. That is, your Pringle is asking the view on Exaro Tiles. Well, a small cap stock and a penny stock, Nilesh, but what is your views on the counter?
Exaro Tiles, could you please come again?
Yes, Exaro Tiles.
Right, Exaro, it is currently trading at 7 rupees if I'm not wrong. So,
Yes, yes.
if it is, yeah, so we actually don't track this particular counter. It's a kind of a penny stock, better to avoid taking any bet in this particular stock.
Okay, all right. Let's move on to another power play that Kanan Manthan is asking the views on PFC. How does the counter look like for you, Nilesh? PFC, any views on the stock?
Looks good. In fact, this particular stock has given a good, strong reversal yesterday. PFC, REC, both the stocks are looking attractive given the kind of risk and reward at current level. So PFC is a buy at current level. In fact, this was also there in our recommendation list as well. So one can keep a stop loss below 370 and a long position can be initiated for a follow-up move to continue towards 405 to 425.
405 to 425. Well, let's move on to another viewer query. That is, your Shweta Naidu is asking the views on CDSL. She's bought it at 1267 rupees, and whether or not it is a good time to add more at the current levels, or is it going into a long consolidation? CDSL, how does the stock look like? Right now, it's at 1111, 1111, 10. But where do you expect the stock to go next, Nilesh?
Well, we have seen a sharp decline in this particular counter. So after such a sharp fall for the third consecutive month, the stock has reached to its multi-month support zone, which is placed somewhere around 1060. So first of all, 1060 should be the stop loss for the long position. If somebody is looking from a positional perspective, then yes, this particular counter can be average and can be added at current level as well. Positionally, this particular counter has a very strong structure. But right now, what we are witnessing is a kind of a carnage in mid cap and small cap, and that's the reason the quality stocks are also falling. So yes, this particular counter can be added as a positional bet, and it can move towards 1350 to 1400 from next 1.5 year time frame. Stop loss should be placed somewhere around 1050.
Okay, 1050 stop loss for the counter. But let's move on to another buzzing stock, which is your Biocon, because the company has been, the stock has been reacting well with about 2% gains. The company's arm received a US FDA final nod for its cancer drugs, two of its cancer drugs, and the arm also received a tentative approval for its drug, which is used to cure blood clots. Nilesh, the stock has seen significant slide. Past 1 month, we can see 17% slide coming in. Do you expect further pressure to continue, or can the stock enter a zone of consolidation?
Well, Biocon, after a sharp decline in last 2-3 sessions, what we have seen is a kind of stability and a kind of a base formation, I would say. Given the kind of extreme volatility in the market, the focus may once again shift toward defensive. So Nifty Pharma Index, first of all, is looking good after a sharp correction that we have seen recently. So there could be possibility of a pullback. Biocon also looks good for a follow-up move to continue towards 330 to 340 on the upside, and stop loss can be placed somewhere around 310. So it looks good at current level.
Looks good at the current levels. Well, let's move on to another viewer query. That is, your Shweta Naidu is asking the 1-year view on CG Power. CG Power, how does the stock look like? Past 1 month, 3% decline, but still modest compared to other counters what we have seen. However, the Q3 was quite underwhelming. Where do you expect the stock to go next?
Well, absolutely. If you compare with the market, this particular counter, in fact, did not correct that much. In fact, it is forming a good base formation in the zone of 550 to 570. So looks good at current level, can be added from a positional perspective as well. If you are looking from a next 1 year time frame perspective, it has a potential to test 700 to 750 on the upside. So stop loss should be placed at 550. So risk and reward is also looking favorable. There are high possibility of a stock, if at all it breaks above 700, which is a 200-day moving average, then the next target would be somewhere around 800 to 850 as well. So a good portfolio stock can be added at current level.
A good portfolio stock that can be added at current levels. But let's move on to another view, okay, which is your Bahadur is asking on the view on Tatva Chintan for the next 1 year. If you look at from January onwards, the stock has gave up the 800 odd levels, Nilesh, but right now it's trading around 700 to 600. Where do you expect the stock to go next?
Well, Lovisha, if you just pull up its 5-year chart, you can
Hmm.
clearly see the stock is constantly witnessing a decline since 2021, and it is constantly forming a lower top and lower bottom formation on the weekly time frame chart. So that clearly shows that the trend is still on the negative side till the time it doesn't crosses above 850 on the upside. So any pullback, whatever pullback we may see, that is likely to get sold into. So not advisable to take any contract at current level. But if somebody is already holding the long position, can keep a trailing stop loss somewhere around 660 and stay put for a pullback. At least pullback may be seen towards 780 to 800, but not we don't see any sort of V-shaped recovery or any sort of a sharp rebound in this particular counter. So better to avoid.
Better to avoid at this point of time for this. But let's talk about Varun Beverages, because yesterday the counter had given good gains after CLS upgrade, and even Jeffries has given an upgrade on the counter. Today also the stock is reacting well, but where do you stand on the counter, Nilesh, for Varun Beverages?
See, VBL, after a good correction for the third consecutive session, although we are witnessing a pullback, but this pullback is not supported by the volume. So, very unlikely to be a sustainable one. 500 is the psychological resistance zone, as well as the recent swing high that was being seen at 500 as well. So, till the time it crosses above 500, there are high possibility of some supply coming in. So not looking promising at current level, but if somebody is already holding the long position, can keep a trailing stop loss at 460 and wait for a breakout to come in above 500. If it breaks 500, then it will negate the negative formation. Then probably we may see the levels of 540 to 560 as well. But watch out for 500 levels on the upside, which is acting as a stiff resistance.
All right, 500 levels that we need to watch out for. Just one last question before we let you go, Nilesh. Any top picks that you have for this hour? Anything that you're finding attractive at this point of time?
Absolutely. So, as mentioned at the beginning of the show, that we are focusing on stock specific action. So, a lot of stocks are on a radar. So, first of all, we already spoke about REC, PFC. Both the stocks are looking good. Apart from that, Siemens is something that is looking attractive given the kind of a base formation that we are witnessing. So, there are high possibility of a follow-up to continue towards 5,250 to 5,300 on the upside. So, with a stop loss below 4,920. Siemens can be bought for the upside target of 5,200 to 5,250. Apart from that, if you look at other stocks, we also spoke about CESC. CSC also looking attractive for a follow move towards 144 to 148 with a stop loss below 134. CESC can also be bought. And crude oil sensitive stocks, Indigo, OMC stocks like BPCL, these are also stocks that we are keeping an eye on.
Okay, all right. With that, we have to let you go, Nilesh. But thank you so much for your time, for answering our viewer queries. Hope we connect with you soon.
Thank you, Lavisha. Thank you for having me on your channel.
Okay. All right, let's quickly take a check of the markets. Well, we have recovered quite strongly from the lows, and Sensex is up about 300 points, nearly 400 points gain coming in for Sensex, and Nifty is also above that 22,200 mark. So yes, quite a recharge for the markets at this point of time. We can see a good comeback from the mid caps and the small cap space also, both of them trading with about 1% each. Majority of the sectoral indices are trading in the positive territory, except from the pharma index, which is seeing a cut of about 0.3%. Definitely the top sectoral gainer has to be today's, which is your Nifty IT index, which is seeing a gain of about 2% at this point of time, followed by Nifty Auto Index seeing a gain of about 1%. But on this strong bullish note, let's quickly get on board with the fundamental guest of the show. We have Amit Jain, co-founder, Ashika Global Family Office Services, joining us. Amit, good morning. So good to have you back. Yesterday we had the longest losing streak for Nifty in the last 29 years. But how do you expect the next 2 to 3 months to pan out for Indian markets? Because today we are seeing a good reversal, but do you think this is sustainable?
In my view, I think this Nifty recovery is sustainable. We have been very cautious on the market since our last interview on 8 September 2024. We have been very cautious on Nifty 50 and Nifty 500 stocks because at that moment of time, we felt that we are very much overvalued compared to the global peers. But after this correction, because after that interview, I think most of the Nifty 500 stocks are corrected anywhere from 20% to 50-60%. We feel there's a deep value in the market at current levels. And in the worst scenario, if the global market don't support, in the worst scenario, we may see 21,000. But otherwise, I believe that 22,000 is a very strong support for the Nifty. And we may have a very sharp pullback rally in April and May.
Okay, sharp pullback rally in April and May. Any particular, target that you're eyeing for Nifty from that front? Are you seeing a good comeback?
I think around 23,500 and 24,000 looks possible in the near term, but only after 31st of March, because that's more a techno funda view, which a research house is keeping as of now. So
Okay.
anything 23,500 looks okay to us.
Okay. What about Amit, on your view on FII sell-off? Because we've seen persistent FII sell-off since the month of October itself. Where do you stand on FIIs, given that we have seen a range of tariff, tantrums which is coming in from US? Then we have the global trade war concerns going up because China has also slapped around 15% additional tariffs. So, what is your stand on this particular point?
You're absolutely right. Since October,
Yes.
since we have seen Nifty at 26,000, the FIS has sold almost 3 lakh crore of Indian equities, which is unprecedented in the history of Indian equity markets. But still, the good is that Nifty is only down by 13%. That shows the resilience of Nifty. So even at current levels, we believe that FII selling will abate because they also need more liquidity and fair valuations to sell their shares in the market. So we believe even FII selling will prune down from this level. And given the global market scenario, we believe that India is a great opportunity now because the valuation looks very, very fair to us.
Okay. You did mention that we can see recovery from April and May onwards. So do you believe that this is the right time to buy at this point of time? And if you suggest as a buy, then what are the sectors that you're finding attractive?
Absolutely, it's a great buy time, particularly into Nifty 50 companies, the giant cap companies of Indian stock market. I think we are very much bullish on oil and gas sector at current levels. We find a deep value in PSU banks, and we see a great value from a FMCG sector. If we have a combination of all three, and particularly into giant caps, we will find a lot of safety with a lot of good returns if you have a at least 2 to 3 year horizon.
Okay. A good recovery seen in the broader end of the markets too, Amit. But anything that you're finding attractive from the mid cap and the small cap space?
So even in the mid cap, I think the stock from these sectors looks attractive to us, particularly into PSU space. I think they have been corrected big time from their 52-week high, and they offer a great value with large cushion of safety for the investors.
Last
Because in this
question.
market, it is important to get a return of capital rather than return on capital, right? Because the safety looks fast because the markets will remain volatile from the global perspective. So it's better that investor park money by taking first step as a safety and then return on capital. So PSU will be a safer bet.
Okay, PSU may be a safer bet. You know what, Amit, everyone is taking a consensus call on banking and financial stocks that they would drive the markets from here on. What are you penciling in from the BFSI sector?
So absolutely, it's a mouth-watering valuation in the banking space. We are bullish on this space, along with the specific to PSU banks, because they are little high beta stocks where most of the retail investors invest. So I think it looks of very fair value to us from a PSU bank space as well as on the PSUs.
Okay. What about the FMCG basket? You did mention that you're bullish on the counter, but what are you penciling in? A good recovery from here on, because the past few quarters we have seen a sluggish demand on the urban front. But do you expect the demand to pick up pace from the FY26 onwards?
Absolutely, it will take up because I think the recent announcement in the budget, where your income tax is free from up to 12 lakh rupees, I think that's going to be a big booster for the FMCG sector, and that momentum in the demand will come back. I think from next quarter.
Okay. What about the pharma space? Because there's a plenty of tariff jitters which is playing out, that Trump is planning on reciprocal tariffs on the pharma exports from India also, because we are also charging a good amount of tariff on US goods. But what are you penciling in? Should we completely avoid the pharma basket until this tariff tantrum is played out?
Absolutely, yes. So we are cautious on pharma at current levels. I think they are fairly valued, and I think they may go for some price correction as well as some time corrections. If an investor want to make money, there are a lot of other pockets where they can focus on for their investments. So we'll avoid pharma at current levels.
Okay, avoid pharma at the current levels. And what about the defense counters? With this show, the focus was back on the narrative stocks, whether or not they would outperform in the coming days, because they were the ones that corrected the most from the highs that we have seen, be it the railway or the defense counters. What is the view for the holistic narrative counters, and of course the defense that is taking focus, because that has taken the defense counters have been back in focus right now.
I believe that most of the price correction in the defensive counters and all that space, railway and all, which has run up very, very fast in last 2 3 years, most of the price correction looks that it is done. But I think they will pass through a consolidation and a time correction for next 6 months to 9 months. So I'll rather avoid, because I have other pockets to invest in where I can make quick money.
Okay. Anything that you're watching out for as a key catalyst for the markets? Anything that we are still ignoring at this point of time? Any risk that you see that the markets seem to ignore? Amit?
So global market, because we have been very, very bearish on the US stock market from 1st January 2025. I'm not sure if you read our co-founder desk letter, but I think we have been very cautious on the US market, because give you the logic, the Nasdaq at 21,500 was trading at an earning yield of 2.9% versus a US GSEC yield of 4.6%. I'm talking about 1st January, right? So do you think that any investor who's sane will invest into Nasdaq at an earning yield of 2.9% versus a US GSEC yield of 4.6%? So that toss-off had been tough. That toss-off will be very tough for any investor. And now we have seen that Nasdaq has corrected big time from their peak, and they are middle of their 52-week high and low. So I think we are very cautious on the US stock market, and that may be a drag down on Nifty if we see a sustainable downturn in the US stock market. So that's the only cautious we are keeping for our investment portfolios.
Okay, okay. Amit, even the Macquarie report that came out today also said that that the India's valuation is comparatively, better than what the developed market like US has that you're talking about. But it is still elevated compared to EM markets, emerging markets. But do you concur with this belief, or how are you viewing it?
I do concur with that belief, because
Okay.
again, in an exclusive interview to Money Control on 28th March 2024, we advise investors to invest into Hang Seng ETF, which is listed on NSE. That ETF is up almost 102% since that date. So Chinese market had been extremely undervalued in March 2024. Even at today, after 100% rise in Hong Kong technology sector and Hong Kong index, it is trading at a trailing PE of 13, and versus India, which is trading at a PE of 20. So still there's a lot of gap between Chinese and Indian stock market valuations. So we believe that money is going to change the valuation, because everyone is looking for safety as of now. So if as a global fund manager, I'll have 2 3 options. One, US GSEC yield, where I can get easily 4 to 4.5% easily, and of course the Chinese market, which is undervalued, but not that undervalued what it was a year back, but still it offers a very fair valuation to the global investors.
Okay, okay. Amit, you mentioned that we are trading at a 20x PE at this point of time. We've seen a significant correction from what we were seeing at 22, 23x PE. So, like going ahead, what do you expect? Because valuations had turned expensive, because everyone was talking about like how India Inc.'s corporate earnings growth has not picked up pace. How do you see the FY26 going on? Are we still on a higher side of an expectation, or should we also reset at this point of time?
If we compare India's valuation with it itself, I think we are at a lower end of the valuation, because generally we have seen that Indian stock market had bottomed out around 18 to 20 PE. So from that perspective, I think we are at the large end of bottoming out of the Indian market. But clubbing with the global factors, because if there's a sustainable correction in the US stock market, which is a market cap of almost $60 trillion, and Indian stock market is close to $4 trillion. So even if we have some significant correction in the US market, India will have a rub-off effect on that. So we believe that risk is there, and I think that will play out with the time. So investor has to watch out both global markets and Indian macros as well, before making any investment decisions. However, we offer a great value compared to our own past valuations because it's bottom out around 18 to 20 PE.
Okay, okay. Amit, you did mention that in the next 2 to 3 months, we can be back above that 23,000 levels. But for a year-end target, anything that you can eye out for? Like, can we expect that we can reclaim back to its lifetime highs?
We can, but we only need support from the global stock market for that perspective. And the US GSEC has to go, US GSEC yield has to go down because if the FIs keep getting 4.5% in the safest asset class in the world called US Treasuries, they will not turn back to India. So if we have a sustainable downturn in the US GSEC yield, we'll find the FIs money will come back to India. So that's the only caveat we are keeping in mind.
Okay, okay, all right. All right, with that, we have to let you go, Amit. But thank you so much for your time, and we hope that we connect with you soon.
Absolutely. Thank you. Thank you for having me on your show. Appreciate it.
Thank you. All right, let's take a quick check of the markets at this point of time because we were seeing a good rebound today after 10 days of losing streak. Well, Sensex is up about 500 points. Bulls are roaring at this point of time and Nifty is above that 22,200 mark. A good recovery seeing in from the broader end of the market. So broader indices are participating today very well and that is what is contributing to an overall broad-based recovery in the markets. Definitely all the sectoral indices have turned into green. Even the Nifty Pharma index that we saw in initial knocking has turned it in the green at this point of time with 0.2% gain coming in. So yes, overall a good market. India VIX is also seeing a bit of a cool off, 1% cool off at this point of time. But we will watch out if this rally sustains and we can actually break that 10 days of losing streak and come back ahead too. But with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing. We will be discussing about how the market is developed, what the stocks were in focus. Until then, signing off.